Hello, everyone. Today we are going to be discussing the business plan for Bluesea Enterprises LLC. So we can begin here by looking at the executive summary. Bluesea Enterprises LLC is a real estate investment company that is focused on purchasing and renovating homes in the downtown San Antonio, Texas area. Once the homes are renovated, they turn those homes into rental properties. The objective for this company is to purchase 1 to 2 residential properties per year over the next 5 years. The purpose is to create a portfolio of real estate assets that, when rented, will provide a positive monthly stream of income. The investment goal is to provide a unleveraged cash-on-cash return between 12 and 15%. So what are some of the objectives for this business plan? 1 is to create a website. 2, consider purchasing 2 to 3 homes per year. 3, add additional staff, and more specifically, to become Tanya's assistant. So now we can take a look at the SWOT analysis for Bluesea Enterprises. First, we'll discuss the internal or the strengths which are internal to Bluesea. 1 is high rental retention, approximately 5 years. Minimizes costs associated with repairs for new tenants, low overhead, no property management and marketing program draining profits, no debt, slow growth plan, which allows Bluesea to absorb new property and develop it properly. Also, previous experience. The family has experience with similar businesses, with similar business models in other markets. What are some of the weaknesses? Tanya manages all of the properties by herself. Also, there is not a backup plan for management. There's no desire to borrow. Property acquisition will be slow. They are new to the San Antonio market. Lack of familiarity with growth trends in varying neighborhoods. Interest in commercial development. Lack of focus on housing versus commercial development may strain capital, and lack of structure. What are some of the opportunities that Bluesea can take advantage of outside in their environment? The increase in population of San Antonio, which creates the high need for housing, the low medium income. New home ownership may be hard for some to obtain, which makes it easier for those people to rent properties. The popularity of the neighborhoods they are invested in. Increased commercial development near the properties makes their neighborhoods more desirable. Proximity to downtown. Desire to live near work location has increased with their typical Gen X tenant. The city of San Antonio's desire to revitalize the downtown and surrounding areas. And then developer incentives offered by the city. Now, some of the threats that Bluesea will face. Commercial developers are able to build faster properties. Property taxes are increasing. The increase in regulations with the city of San Antonio. Similar developer plan, which is a similar developer with a more organized financing and purchasing plan, may take away growth potential opportunities. The quality of the contractors. And then high employment rates have taken many skilled laborers to other industries and other cities. So what is the recommended strategy? Specifically with management is to hire support tenant needs, or hire staff to support tenant needs instead of Tanya doing this by herself. Develop HR needs for growing staff. Manage budgets for each property. In marketing, define the customer base. Develop sales plan to lease out properties. Define pricing strategy. And then in operations and production, oversee remodels. Develop processes for maintenance on a routine and as-needed basis. Finance and accounting. Develop a capital budget. Assess QuickBooks abilities to provide financial reporting necessary for growth. Create pro forma reports. With research and development, survey competitor pricing. Gather vacancy information. Determine new neighborhoods for growth. And then with management information systems is to develop a management information system. With the growth of properties and tenants, there will be an increased volume of information to store, such as tenant leases, building information, service providers by specialty, appliance warranties, property plans, etc. Creating this management information system database is very key. Now, we'll take a look at some of the financial analysis of Bluesea. Here on this first financial slide, you can see that we are looking at the benchmark for the residential real estate management industry versus Bluesea and the base year 2017, and then the estimated numbers for year 1, year 2, and year 3 of our business plan. So there are 3 different types of financial ratios presented here: liquidity ratios, leverage ratios, profitability ratios. Liquidity ratios measure the ability of a business to pay its short-term debt using cash and light cash assets. So that would be your current ratio, your quick ratio, and then also your fixed assets to net worth. So this is the benchmark here for the industry. This is the client in the base year, and then this is the difference between the benchmark and the client. And then we've estimated these numbers for year 1, year 2, year 3. Another one of the ratios is the leverage ratio. This measures the amount of debt that the entity has within its balance sheet. So some of these ratios are current liabilities to net worth, current liabilities to inventory, and then total debt to net worth. And then the last ratio on this first financial slide is the profitability ratios, and they measure the ability to increase owners' value through profit maximization. Now, these ratios are the total assets turnover, working capital to sales, after tax to sales, return on assets, return on equity, and EBITDA to sales. Now, on this next slide for the financial information, this is actually the balance sheet within the 3-year implementation plan. It is showing the increase on fixed assets in the amount of 1.38 million by the end of year 3, having 14 units to rent. It is also showing the decrease of inventory assets by year 1. This is a result of the proposed sale of the home, which is located at 929 Burnett. Deferred funds from insurance is assumed to be used to repair the affected properties during the first year. No additional gain on this item. During the implementation, it is showing the balance of the commercial real estate loan per year per an amortized schedule. Equity will require a capital contribution of $50,000 by Bluesea LLC on year 2 to maintain the prorated distribution of 50-50. Now, all of this information for the financial statements, there are 3 slides, will be located in the business plan with more details. Now, on slide 3, this is the actual income statement with the 3-year proposed business plan. The rental income is showing the increase in rents per year. It is proposed to have an increase of 9.7% per year. This is considering the inflation costs, the inflation rate and the cost of living in the area. During the first year, we are considering the sale of 929 Burnett, and we are estimating a revenue increase or generated revenue from that property of 15 to 20%. It is showing our adjustments per our strategy. Addition of advertising expense in the amount of $5,000, added interest paid on the CRE loan per year. Wages have been increased to $70,000 in consideration for the addition of Tanya's assistant. In summary, we established a budget of $18,500 in variable costs per home per year. Also, for fixed costs, we have a budget of $109,600 for year 1, $119,500 for year 2, and $129,650 for year 3. With our strategies, we are trying to increase the net revenue at the end of the 3rd year from 15.97% considering rental and flipping to 36.91% just doing rental activities. We'll also take a look at the value chain analysis. Now, some of the primary activities within the value chain by Bluesea are the inbound logistics. This is purchasing home, purchasing major equipment, appliances for these homes. In operations, it is the actual renovation of the home, so using the tools and hardware purchased to make a home even better. The outbound logistics for the primary activities. Since the homes are purchase will not be relocated, there is not much outbound logistics within the property rental industry. Marketing and sales. Properties are marketed online through realtor websites and applications, newspapers, and signs in yard. Advertising properties online through MLS and other websites is an efficient way for people to be able to find the property that is for rent. And with service, ongoing maintenance of the property is a big part of the service with rental properties. If appliances break, then the property owner and the property management company is responsible. This is important to keep tenants happy and maintain a good reputation. Now, some of the secondary activities in the value chain are procurement, technological development, human resource management, and firm infrastructure. Procurement is hiring independent contractors for maintenance requests, lawn services, accounting software, things like this. Technological development currently is using MLS to find properties within a certain search criteria. Human resource management in the industry is hiring realtors to list your property, employing people within the property management companies, contractors for construction and renovation, and then there are a lot of people involved within the rental property industry just because of the working together with contractors, the city planning, and then also people to list those properties online. And then lastly, with the firm infrastructure, generally known as overhead, could be anything from dealing with state and city taxes, lawyers, permits, or just to name a few. So on behalf of Nicole Brook, Sean Brook, Jose Aguilar, and myself, Chris Matthews, thank you for watching this presentation. And if you have any questions, please feel free to reach out to us at any time. Thank you very much.